A very good morning, ladies and gentlemen, and thank you to Gigi for the welcoming address. I hope we all are going to work together so that each person go back home better than they came. My ambition at the end of the day is not to give anything of theory, it's not to give anything of certain provisions of the law, etc. It is just for us to understand, and together we look at the detailed procedure involved in insolvency with a view to making any participant able to accept appointment as liquidator, as administrator, etc., or as even as a receiver or receiver manager. So my ambition is quite simple. It is essentially to ensure that participants get back or go back home assuring themselves that I can take up the job of a liquidator. If that ambition is realized, I'm also fulfilled as far as this training session is concerned. And let us not forget, it is designed as train the trainer in the first instance. The certification you are getting is dual. You are going to be a trainer, you are going to be trainers at the end of the day. And at the end of the day, I also believe you will be able to do certain things as of practice deriving from your membership or association with ICSAN. And these are the cardinal points, cardinal objectives when this program was designed. I hope at the end of the day, each facilitator and ICSAN at large is able to inculcate these objectives so that we go back actually better indeed than we came. On that note, I'd like to once again welcome you and to wish you a good time together with me. Thank you. We shall be looking at the procedure involved in procedure involved in company liquidation, etc., etc. But the starting point for me should actually be, I hope we can see my screen.
Yes, sir.
Yes, you can see it. Participants, please respond.
I want to be sure everybody can see my screen. Can somebody please, one of the participants just indicate or signify that that's the truth?
We can see your screen, sir.
Can see.
Thank you very much, man, sir.
We can see.
Yes,
Right.
we can.
Right. Now, when you talk about insolvency, you talk about liquidation, you talk about receivership, in as much as the Companies Act of 2020, CAMA, in section 703 to 708, has actually now has made provision regarding who should be an insolvency practitioner. I'm happy to be one of those first set of people that have been so accredited by the Commission. And the requirements are not simple. I mean, I should be able to say that it's quite some rigorous requirements to be fulfilled before that happens. And what we now want to do today is to be able, is to ensure that any of us here can actually, in 6 months to 1 year, equip him or herself enough to be capable of applying for such accreditation and practice effectively as an insolvency practitioner. So my ambition is quite tall for this 2-hour delivery, and I hope we participate enough to make it a reality. If you say insolvency, you will encounter so many words, so many practices within that thing we call insolvency practice. But what is important is, first of all, to understand what it means to be solvent and differentiating that from what it means to be insolvent. The understanding of that from the point of view of financing and from the point of view of law is critical. And once that first step is understood, we can then build on it a practice of insolvency. When you say someone is insolvent, from financial point of view, it may not be on all fours with what the law regards as being insolvent. Insolvency tests either a person or a company's ability to meet its obligations as and when due. Now, both law and finance and general administration may not agree totally in that area. The 2020 law still assumed that 200,000 is the benchmark for measuring insolvency, but it's not exactly so. That is law for purposes of any action. You can see that is the law. But for purposes of enforcement, now I'll be very careful here. For purposes of enforcement of a creditor's rights, 200,000 is not the benchmark. You have a debenture in place. Default is default. Default doesn't have to do with not being able to pay 200,000 naira. Default, as it relates to debenture, like we can begin to use all asset debenture, is a function, is defined, not strictly in terms of what is ukama, but in terms of what we have in our debenture, and now you have been unable to pay. I'm enforcing this charge. Each time a company pushes itself to the point of either compelling or pushing a creditor to want to take appropriate action as a creditor, we can begin to look at solvency and insolvency in that area. Everybody on this platform, I reckon, is a senior person wherever he or she works, either as individual practitioner or as in-house legal counsel, etc., etc. We occupy a position that one cannot say these are junior people. And it is also, against that background, I'm trying to define solvency, insolvency, not only from the point of view of law, but from the general perspective of business administration. That somebody managing a business should not wait until he or she is left with 199,000 before they cry foul that look, there's insolvency here. Insolvency occurs when an entity is unable to pay its debts as and when due. Instances where a genuine creditor is provoked to take action against the company. When these actions come up or are threatened, one person you can call out to is an insolvency practitioner who want to look at the company's affairs with a view to stabilizing it. And kudos to those who presented the recent karma. They now make it possible for companies on their own to appoint an administrator. Who is to be appointed administrator? It is you and I who are on this platform. Which then means that we must know what an administrator ought to do immediately upon appointment. The ambition is that at the end of this training, participants should be able to update their profile, whether corporate or individual profile, to say, yes, we can also act. My firm can handle the job of a liquidator. My firm can handle, or even as personal, I can handle being an administrator of a company. That is basically what we want to do. But looking at it from the point of view of winding up, in the first instance. But the whole gamut of what is contained in insolvency cannot be done even in 1 month. So in these 2 hours, we will focus in the area of winding up, and then perhaps when time permits in future, we can elaborate and look at other areas like factoring, like management, reconstruction, compromise, receivership, etc., etc. But as you later will understand, whether you say winding up, you say liquidation, administration order, receivership, compromise, and reconstruction, they are all terms commonly used in connection with management of companies' liquidity. And when we say liquidity here, I'm referring to the company's working capital. So the terrain you are about to enter is not something you can say, I'm a chartered secretary, so I can handle it. I'm a lawyer, so I can handle it. Because it is a combination of many things put together. The knowledge of law is key, but the knowledge of law in that specific area of insolvency, the knowledge of accounting is also very important. So the best among us is he or she who understands the ramifications of what you call insolvency management and practice. When a company is unable to pay, what is challenged is not the fixed asset. What is challenged is its working capital. Working capital is denoted by those things you see in the balance sheet as current assets and current liabilities. Simply put, when a company is challenged and we say it is facing insolvency, what is being challenged is not the company's fixed assets, even if those assets are subject of mortgage. Until a creditor takes an action, the assets remain where they are. But in the first instance, a company will go into a trouble without first showing sign of weakness in the area of working capital. So what is this working capital? It is this working capital that even a liquidator, first of all, attends to immediately upon appointment. Among other things, he or she will have to do.
Hello, sir. We lost you for just a few minutes. The network was dragging.
You lost me for 2 minutes?
A minute.
Okay, for a minute. Oh, sorry
Yes,
about that. I hope I'm fully back now.
Yes, you are.
Okay, what I was saying here was that maybe in the last 1 minute, if I can retrace my steps, I said all of these things we are looking at, when a company enters into a problem, this problem first must be showing. The signals must be seen in its working capital. And I was trying to explain what working capital is as being the current assets against current liabilities as you see them in the balance sheet. I was using that to explain the fact that anybody on this platform cannot give an excuse that he or she is not an accountant. So what is his own concern? It concerns anybody who applies to be and is appointed a liquidator, because these are the first set of areas of the company that you will have to quickly focus, to stabilize, to use what is available, to manage what is not available. Perchance, a company that is declared as insolvent in one way may wake up to be only lacking in cash, but having other assets that can be immediately turned to cash to bring the company back to stead. And I said also that this may include factoring in core financing terminology. This by way of introduction, gentlemen and ladies. Let me now go into the preliminaries. In attempting to work as a liquidator or to be an insolvency practitioner, I will recommend that you understand the legal perspective, the legal basis of that practice from the point of view of section 570 to 690 of CAMA. You will have to read these sections as a semester course. Then you are well grounded, at least from the point of view of what needs to be done to satisfy the law. Not in terms of what steps and practice need to be followed. That we will look at as much as we can. And setting the timeline and preparing registration document is the first step that needs to be taken when entering into a insolvency or a winding up assignment. Set the timeline and prepare registration documents. I've explained all of this as we go. Now, when you first of all look at 570 to 690 of CAMA, it will tell you what time is required, what waiting period is needed for every action to be taken in the process. So when I mean set the timeline, is to draw a timetable that is as much as possible foolproof from the point of view of law. This must happen at this time. Then this must happen. Then this must happen. No successful liquidation can be handled without the liquidator having an idea of what needs to be done per time. It is not an assignment you can leave to when I want, I will do. It is an assignment that is statutorily time bound. And these timelines must be reduced into a timetable that forms like a Gantt chart that you can see it at a glance. You come to the office in the morning, you see what is next to be done. Everything is laid out as a matter of statute. And of course, you don't want to accept being a liquidator or administrator or receiver without conducting a search. In other words, the next step after setting your time is to conduct a search of the current statutory position of the company at the land registry and also at the Corporate Affairs Commission and any other registry maintained where the company has its records. This search will reveal the current position of this company vis-a-vis its creditors and also perchance debtors. It will, for instance, show you who the directors of the company for the time being are, because those are the people, legally speaking, that the liquidator can deal with depending on the type of liquidation or winding up. All these things that we are saying, they are not for record. They are not things stated for theory. They are actions to be taken and to be seen to have been taken. That you set a timeline is not something that is rhetoric. That you conduct a search of the company's position to date is not also rhetoric. There are things you've got to do and to be seen that you have done them. So it is in doing them that you even know, for instance, are there charges, which is the first thing being. For your job as a liquidator is, for all intents and purposes, fiduciary on the one hand, and also an officer of the company who has power to do and undo within the provisions of the law. And you must be seen to have conducted the affairs of the business in the most professional way. Otherwise, by the time you look at 570 to 690, you also see the liability that the liquidator assumes each time is appointed a liquidator. So conduct all of this. It will be a guide as you proceed into the assignment. Hope I'm communicating.
Participants, please.
Yes, you are, sir.
Right.
Yes, sir. Yes, sir.
Now, focusing a voluntary winding up, which by extension has similarities, in fact, sometimes on all fours, with all other forms of winding up or liquidation. We earlier agreed that this job requires a lot of timetabling, a lot of timeline setting. The first step in this is to prepare a statutory declaration of solvency. Here we are talking basically about voluntary winding up, in which case the company is saying we have money. It's not as if we can't pay what we owe, but voluntarily we want to wind up. It is the easiest way to teach a person going into insolvency practice. But as we go on, we also mention other key areas that are also generic to all forms of liquidation, whether at the instance of creditors or at the instance of regulation. What needs to be done beyond this level are generic. That is, beyond statutory declaration of solvency, which is peculiar to members' voluntary winding up. All other things that we'll be talking about, be it tracing, realization, etc., they are generic. They are general to all forms of insolvency, whether you call it compulsory winding up by court or under the court supervision, or you call it administration, etc., etc. All other things become general. This area basically peculiar to winding up by members. So you prepare a statutory declaration of solvency. This I will show before we leave the session. Once I drop this, I will put it on the screen for us to see the character of a statutory declaration of solvency. Then obtain signature of all or a majority of directors. Now, you must have conducted your search to know who the directors are and to be able to relate their names to their signature, because you already obtained a certified true copy of these documents. You may not want to rely on what the company has given you, especially if this winding up was prompted by squabbles on the board. You want to be sure you get what you need to get from recognized registry. And that becomes something you want to work with. You have seen their signatures, they gave their names, then they sign their statutory declaration of solvency. A statutory declaration of solvency is a statement on oath by the directors stating that we want to wind up this business, not because we do not have money, but the company has come to the end of its useful life. If they fail in that promise, the liquidation turns to creditors winding up. That is to say, it is no longer qualifying as members' voluntary winding up. It goes then into creditors winding up. And what we'll be saying later, still pertaining to it. Obtain a statement of affairs of the companies as near as possible to the latest audited accounts. This is the best way I know how to say it. A statement of affairs shows you the assets and liabilities as of a date. A statement of affairs may even be on a sheet of paper, but signed by directors, stating that as at the date of going into this winding up, this is what the company is worth. And at that point in time, Even if a law firm who has gotten this assignment, you quickly realize that you were never taught how to interpret, except you're also a general secretary. You were never taught how to read balance sheet vis-a-vis the statement of affairs that have been given to you. Because the statement is given to you as a liquidator. It's given to your team. What to then do with it is not simply to look at it in the face for purposes of filing a loan. You look at it against the latest balance sheet audited to be able to know, for instance, that the latest account of the company audited was as at 31st December 2020, and the company is going into liquidation in April 2021. As an instance, the statement given as at April must be compared with the position of the company as at December 2020. And question can then be asked if there are, as expected, there will be differences. Even as liquidator, you will still have a duty to explain or to ask for explanation as to what has happened between December and April. That's one hypothesis. Another hypothesis is for the liquidator to say, look, whatever has happened in the past, I don't want to know. This is the document you are giving to me as being your assets and liabilities. As an officer of the law acting in fiduciary, these are the assets and these are the liabilities entrusted to me, for which I'm going to give an account of liquidation to Corporate Affairs Commission. So I want to block my eyes to whatever happened between December and April. But in my own approach to winding up, I think I've wound up about 2 or 3, 4 companies, is to also want to know what happened between December and April. It will give me a clue as to whether there are hidden assets or undeclared liabilities that may rear their heads, even when I think I'm discharged, to not bring me back to the work again. But the question will be asked, when the liquidator, did you not pay attention to all of this? It is an excuse for me to say, well, the one they gave me didn't contain this. But did you then refer to the company's schedule of debtors? Did you ask? Was it given to you? So, in other words, the statement of affairs given to you, understand it now, because I will later show it on the screen, then you can relate to what I'm saying. Each of them may be rendered in one line. For instance, they give you debtors, 500 million. That one line item may subsist in 500 pages of other documents and schedules. So the job of liquidation from that point of view is not an easy task. For the time you will need to even go through the schedule one by one, rank them, age them. What I mean aging them is, ordinarily in the course of this company's business, are these debts that should have been written off? You want to ascertain from the statements that the company has a total of 500 debtors, 500 million debts to collect. Your duty as a liquidator is to trace all of these things, recover them, and use them to pay those that the company was owing. But you also want to apply accounting principles to it. That's why I said in the first instance that the job of insolvency is not of law, neither of governance. It is a specialized area that must be understood in its own method. If the company policy says debts aged between 90 and 360 days should be written off, you may bother less about such items, but you have a basis to disregard them. But if they come, they become a windfall that you will still use in stabilizing the affairs of the company. For each item in the statement of affairs, you do the same thing. And you cannot do it because you are not a magician. That is why you engage some liquidators. The first thing they do is to want to lay off everybody, to want to, because the Lord give them the power to house the directors. It is not a wise thing for any liquidator to do, at least in the first 3 months of appointment. He is still trying to understand the affairs of the company because he is stepping in more or less as the overall boss, and you cannot administer a company you don't understand. So liquidators sometimes also must give themselves the time to learn, and that learning period cannot be less than 2 to 3 months, depending on the affairs of the company that you are winding up. A company belonging to husband and wife Germans living in Nigeria for good, you can't wind it up the same way you wind up a company upon petition of a creditor. So you must understand it very perfectly. So you need that time to understand the business, during which time you are having series of meetings, and by power given to you, you summon even directors to a meeting. I want to understand how you do this. You have a debtors balance of 6 million. Explain, how did this come about? How many of them have you written? How many of them last acknowledged this debt? How? Your system. Let me read. Many things go into liquidation. What I'm trying to say here is to give a picture of what a liquidator will do immediately upon appointment. What we have gotten so far, you've seen the SDS, you have seen the statement of affairs signed by everybody, then all of these together have to be filed. The significance of filing this, gentlemen and ladies, you must understand. It is so that the commission can hold you responsible for these assets and liabilities which have been registered for you as liquidator. And the running you are running, I'm a Yoruba man, your efforts are oftentimes geared towards ensuring that at the end of the day, I give account, at least to justify that I operated within the statement of affairs. All the assets that the company said they had, I was able to account for it. All the liabilities that was acknowledged, I was also able to account for it. It won't be like the case of Delta State, where the state said nobody was owing them, nobody stole their money. But the money now came back from UK, you now say the money belonged to you. That one I don't understand, but we won't go into that, that's a digression. So all debts that were properly accounted and documented in the books, the liquidator must see them. What he has been able to do with them, he must account to the Corporate Affairs Commission before he gets his discharge letter. File all of these, you have filed them, that's still in the preliminaries. All these things you are doing, gentlemen and ladies, you've not started your job as liquidator. Unfortunately, all you are doing so far, what we have done is to register our presence that, behold, Corporate Affairs Commission, behold, the public have been appointed liquidator of this company. And I've registered it with the commission. I'm recognized. You obtain acknowledgement from the Corporate Affairs Commission to signify that the SDS has been filed. Then observe a waiting period of 5 weeks. That's what the law says. And that was why I said insolvency, liquidation, etc., however you put it, is time bound. And you must be ready to draw your timetable. Before we close this meeting, I will show you one as well from those that have been done in the past. observe a waiting period of 5 weeks from the date of filing. But you don't have to wait all these 5 weeks. But within 5 weeks, you must now pass a resolution. The company passes a resolution. Don't forget, the first step is statutory declaration of solvency. We are talking here about a voluntary winding up. And I will pause to go back and say, if this winding up or liquidation was at the instance of a creditor who has petitioned a federal high court, usually at the federal high court, let's now assume that the creditor has petitioned for winding up of a company on account of insolvency. By our law today, if that person is unable to pay 200,000 naira. But the question you also has to say, if that action is pursuant to a debenture, will the creditor wait till his exposure diminishes to 200,000 naira? The answer is no. So that 200,000 is just a guide. It's not the standard. So a bank that holds 500 million payable quarterly and 2 quarters are outstanding, that bank will take an action. That bank will take an action, and that action will be in the form of a petition to the Federal High Court to liquidate that client or that customer. And when that happens, the court steps in. But the court will step in by appointing a liquidator immediately. What the court will do is to appoint the deputy registrar of that court as the official receiver. And the work of official receiver is sometimes temporary. It is mainly to call creditors and the client together and find an amicable way of resolving the problem. If they can't, they appoint a liquidator by passing appropriate resolution. This time around, it will be creditors' resolution to wind up the company. I simply just created a loop to bring the two together, because what we'll be doing from now on is not peculiar to one particular form of liquidation. It's generic. That you have to trace, it's not of this or that, it's generic. So pass that resolution, appointing the liquidator, and pass the resolution also to wind up the company. So 2 resolutions in one, but separately produced. 2 resolutions at the same meeting. One appointing the liquidator, second one that the company should be wound up. And these 2 resolutions shall be published. You publish both resolutions in 2 national newspapers or in the Federal Government Gazette. Federal Government Gazette can be reached either at Broad Street or at Apapa. You pay, they give you quotation as to what it will cost, depending on number of words in these 2 resolutions. You publish it, or you go to 2 newspapers and publish those things. Now your job is about to start. With these 2 publications, it becomes conclusive that you have been appointed and that you have been given such powers as will be needed to enforce your rights so as to be able to do your job. The publication or the Gazette, since you have received the statement of affairs before now, telling you where the assets and liabilities are. You know, I said something. I said, this sheet of paper that have been given to you, unless of maybe just one paper like this. But in it is a lot of accounts. I said you must have called for the schedule, the backup schedule of all of these figures. From there, you probably must have seen who the debtors are. you must also have had the accountant. That's why I said, don't lead them off immediately, because you will need to ask people questions. You can't go to the office and begin to open a computer of which password you don't have. So you still keep as many of the key employees as will be of use to you in your own assignment. So you then have to go through this schedule one by one. You see addresses there. By part of part of you now, you can serve them, you can intimate them of your appointment, not just with the Gazette or the publication, but along with a letter of the Corporate Affairs Commission, or in the case of courts, the court order that you have now been appointed the liquidator of this company. That is sufficient authority, even to the bank, to place a caution on the company's account. It is your right, on duty, to direct the bank at that moment. From the date of this appointment, the director's signatories to this account ceases by virtue of the attached court order or by virtue of the authority here conferred by the Corporate Affairs Commission, as I become the company's liquidator. Believe me, if the bank do something inconsistent, from that day, it can be sued. So that means a violation. I hope I'm still communicating. These are the steps that the liquidator is taking immediately upon the conclusion of this preliminary. We call it circularization. Now, he has registered, he delivers all of these things to the commission, like I've said earlier. He pays appropriate fees. They give him an acknowledgement in form of a letter, which I said will now be attached to all other documents that will be served on the stakeholders. I'll put them as stakeholders: the debtors, the creditors, the bankers, the solicitors to the company, everybody, because their instructions will not now come from the board. It will come from the liquidator. They now don't listen, so much so in court, to the board. They listen to the liquidator. And the liquidator, wanting to establish his authority, has also called a meeting of the directors, not formally as it is in the law, but to let them understand the implications of this appointment and why they shouldn't, in contravention of the law, take certain decisions without carrying the liquidator along. At that point in time, the law won't see them. They will see you as incompetent. And like CAC issued, and they wrote in their letter of accreditation to some of us, if you have found one thing, this license can be withdrawn. And one of such instances of withdrawal is if you allow directors mess you up. You are the liquidator, you are the one in charge, not the directors. But by your leave, certain things can be done by them. Let me quickly look at the chat room before we now go into our work. Now that we have registered the process, all that we have done up to page 7 of this presentation, we have been able to register the process. We are now known to the public as the liquidator. Newspaper is carrying it. The creditors now know. The banks have been circularized of this appointment. Then you can say you have done what? You have registered the appointment as a liquidator. I will quickly look at the chat room and see there are things there for us to quickly attend to. That may take us a while, but it's still part and parcel of our discussion. Good morning, everyone. Good morning, everyone. Good morning good morning to the organizers, facilitators, and fellow participants. Yes, we can. Sorry, to take me some time. I want to be sure I see everything. Good morning to the indefatigable, this one I big English, and fellow participants. What is SDS? SDS is Statutory Declaration of Solvency. It is common with liquidation that is voluntary at the instance of the owners. They do not want the company again and they want to wind it up. It is a statement on oath taken to a federal high court or the regular high court in the Ikeja or anywhere else where you pay appropriate affidavit fee and it is stamped. Thank you. Thanks, I wanted to reconfirm. Can both resolution for winding up, sorry, I mean that. Can both resolution for winding up?
Sorry, sir. Let me help you, sir. Can both resolution for winding up and appointing a liquidator be in one and same document?
No, it cannot be in one and same document. It is going to be at the same meeting, but both of them are going to be rendered separately. It used to be the case that even CAC will reject it, that these are two different processes that must be documented separately. Can SDS suffice for statement of affairs? No. The SDS is simply stating that I will show you one before we go like I promised. He's saying that we, being directors of this company, we have examined the affairs of this company, and having done so, we have formed the opinion that the company will be able to pay its debts as and when due within the next 1 year. You get that they can pay within the next 1 year. So that is essentially what that one is saying and nothing more. Let me also look at the rest. Can you quickly permit me 1 minute? 1 minute, please. Sorry for the break in transmission. I'm sorry about that. So please share the practical challenges that may arise up to the point of circularization. Challenges, well, if you call them challenges, I will simply say circularization will occur immediately you register your process. There are not much of challenges there, aside from addresses that may not be given in the company's books. Some customers are known in the heirs, not on record. You look at invoices, you don't even see a clear address of these guys. The address you know is different from the one that is the registered office. Another challenge is wanting to clear at which address should a party be properly served, at the registered address or business address. For purposes of liquidation, don't worry your head looking at registered office address. Look at where the business is being carried on, where somebody will attend to that letter and give necessary, feedback. Not necessarily that, because we're not stating and we're not commenting an action. We're basically tracing. But we look at all of this as we go on. So I think this is about all the questions I've seen so far. What if a company that is not in debt chooses to do nothing, i.e., not taking steps for voluntary winding up? Well, in my experience, and looking at the way the country is being run now, you will just see that we are accumulating statutory debts if you don't just buy the bullet and wind up the sheet. In other words, minimum tax liabilities may continue. Statutory obligation to file may continue. So why don't you just then wind it up and avoid yourself the stress? Don't forget, the directors are still liable and they can be traced. If you look at 320 of the newcomer, even their residential addresses are now required to be filed. So there is no hiding place. That is what seems to be happening. That is the trend or the direction we want to go. So if that is the case, even now that things are more precarious, why don't you just wind it up? And then you have your rest of mind. Taxman will chase you, CAC will chase you, FRC will chase you, and so on and so forth. Thank you. Now, I think we can come back and continue from where we stopped. So, basically, registration has happened. Oh, sorry.
Ojiji, please, we can't hear anything. Is the facilitator muted?
Sorry, dear participants. The facilitator, it appears as if he's been interrupted at the moment. So just please bear with us. Just give him a few more minutes. He was interrupted. Please, just bear with him. Thank you.
Thank you.
Sorry, gentlemen, like Ojiti said, I was interrupted, but I will be interrupted to the end. I'll switch off my phone. I am sorry. Thank you and welcome back. So, as I was saying, we have basically now registered the process and we want to now start the process of winding up. Am I communicating, brethren? Am I heard?
Yes, you are.
Thank you very much.
Yes, we can hear you now.
Thank you. Now that you have registered the process, the acknowledgement letter you receive from the CAC of the court order is asking you to continue with the work as liquidator. And how do you continue? You have only just completed the initial registration. Now start the liquidator. Now, let us look at your position from the point of view of law. You are acting in fiduciary. Your appointment renders the directors redundant. That you must know from the beginning. You take charge of the management of the business as the liquidator. And you don't take charge of what you don't understand. That was why I said at the beginning that you may have to give yourself 2-3 weeks of trying to understand how the business operates. You will hold series of meetings with the management, with the board, all in trying to understand how the operations of the company is, how they operate. That is essential. Then, correspondences on behalf of the company, you immediately reprint the letterhead. The one they have before now is no longer useful. You must print another stock on which you now say XYZ Limited or PLC in liquidation. And before now, if the letterhead of the company had the list of directors, the one you are reprinting shouldn't now have their names. You may in fact simply put your name in liquidator where the directors. And let's get it clear. We are not saying at this time that directors have been removed. No. In fact, a company can be liquidated and still come back to life. Liquidation is like calling doctors to look at a patient. The patient can be revived and continue with his life. So let us not equate redundancy to removal of directors. They are redundant, but nobody has removed them. They are only acting in the background, giving the liquidator necessary support, touching the lights where they should see better and clearer. So he signs correspondences on behalf of the company. He can take any action that the directors would have taken as the board. He has authority. In fact, one of the first steps you should take is to circularize the banks. And you know who the banks are. They sometimes will give you tough time. This is from experience. But you must put your feet down that the signatories must change. And they change it to reflect your name and signature. So at that time, nobody should sign. You know why they must not sign? The assets are now on your head. The moment you receive the statement of affairs on oath and you are appointed thereafter, the assets are now in your care. So the more you won't allow it filtered by any board, but for you to quickly move in and take custody of everything. You exercise all powers of the company, you can sue in the name of the company and take necessary actions. If he is an official receiver, he reports from time to time to the court, which appointed him. As he progresses, he goes back to the court. Let's assume it's court 14. You will go back to court 14 or the Federal High Court and say, this is how far we have gone. We have been able to meet with the creditors. The creditors have not been able to agree. Their meeting is adjourned to so date, so time. It is hopeful they will appoint a liquidator by themselves. You know, that is the official receiver for you. He reports to the court from where he was appointed. What the law says is that he must be deputy registrar of that particular court. And his powers are contained in section 588 and 644. I will urge you to further understand these statutory powers, apart from the general powers that we have mentioned here. I hope I'm communicating. His costs and fees are payable in priority out of assets, section 647 of CAMA. So for those who will be asking, what will be my fee if I want to accept an assignment as a liquidator? I would say, from the moment discussions are ongoing about whether you'll be appointed or not, try and understand the business of that company. Try and envisage how long it will take you. Try and understand the number of customers you probably have. Try and understand the industry in which you operate and the likelihood of you having to face the regulators on their behalf. Try and envisage many things. The number of hours you will put on that job per week, the number of other supporting staff and professionals that you may also have to call in. The fact that you have been engaged as a legal practitioner to wind up does not mean you will understand all that needs to be done. For instance, if the company has irregular assets, what I mean irregular assets, I mean assets other than the ones that are common, cash. You can just walk up to a cash slot and ask, how much is this vehicle I want to sell it? There are some assets that you have to do a proper independent valuation of experts. If you are, for instance, appointed liquidator for an oil and gas company, do you know how much a rig is sold? Do you know how much some of the equipment are sold? Even if they show you, it may be like a pin. Do you know it costs like 40 million naira? You don't know. So you will factor all of these because all these assets are now in your care. And some of them, as we talk about realization, you can't realize without putting appropriate value on them. In the statement of affairs given to you, they've lumped everything up. They call it fixed assets, 500 million. Okay, is all assets now going to be taken in one basket and sold? No, you still have to depict them. And what I mean is you still have to take them one by one to sell. And that calls for a lot of tact, valuation, processing. So all of this must be put together in a basket. So I do not see today any winding up, whether it is voluntary or whatever, that will cost less than 10 million naira. Let's say at the minimum 7.5 million or 5 million worst case scenario. That will take you 2, 3, 4 months of your time. And worse off if you still have to engage other people. And all costs of publications, of gazetting, I'm not talking of those ones. Those ones the company must pay. You take it out. All you need to do is to show receipts because you are also still going to appoint an auditor. If you don't have that skill to also prepare your account, even if you prepare it, the requirement is that you still have to engage an auditor who sign off on that account, who sign it off that yes, the process of liquidation has been conducted in the most professional and fiduciary manner. So your cost is taken in priority. See the way it is, in priority. So you then be asking yourself, if there are salaries unpaid, which one comes first? What comes first or what comes second, apart from registered mortgages? If they are all administrative, paying employee salary to continue the operations is priority. Am I communicating? Because we are not talking of anything here other than working capital. Look at it here. It is clear. Assets, we take it in priority out of assets, not out of working capital. So out of working capital, the day-to-day running of the business, you want to buy diesel, you want to pay NEPA, you want to pay this, they take priority. But when the assets are now depleted, when they are now boxed out and everybody wants to take what belongs to them, if your fees and costs are still outstanding, they are taken in priority. That's what we are saying. Liquidation process. Review the statement of affairs and relate it to the latest financial statements, which I've said earlier. Confirm any difference and trace the causes. Here, your knowledge as a legal practitioner may not be too adequate. You perhaps will want to work side by side a chartered secretary or a chartered accountant to say, look, in 2020, this asset was 500 million. This time around, it is 640 million. What could be the difference? Okay, this is an increasing asset. That is the reason. What we need to do is to trace it to the fixed asset schedule. Was there an addition during the year? If there were, you trace it. Why was it not there in the statement of affairs? If it was there, so you trace, you look at the causes of differences. The differences must be attended to and brought to the books for purposes of liquidation account and distribution. What is not in the statement? A good in transit that has not yet been delivered as of the date of passing the resolution came in 2 months later. It wasn't in your statement. Now it has come. You have to book it. It becomes part and parcel of assets either to be sold or to be distributed and must be accounted for. What am I saying? The work of an administrator, a liquidator, is not something that is paper, depending on the nature and size of the company you are dealing with. Then we say, take control of the books immediately and work with the CEOs/CFO to handle circularization. They know their customers more than you. The fact that you have been appointed from the blues does not make you a soothsayer or does not make you a witch. Don't lay them off immediately, even if the company is going to be dissolved. Don't lay them off immediately, even if ultimately the company is going to be dissolved. Work with them for the time being. Now, dealing with the operation/management, in a very large winding up, consideration must be given to operations and management. In manufacturing companies, for instance, work in progress must be allowed to proceed to finished goods. Your job is not to, you have gotten there, you want to, no. Pay attention to the operations. What does the company do? How do they do it? That's why I said in my own approach, allow 2 to 3 weeks to study the business. You have just been appointed, if you like, take it as an MD who want to manage the company for the time being, with a view to stabilizing it if you can, and if you cannot, to have a final meeting and call for the solution. This will then inform the decision as to what number of employees and what cadre will be needed to carry on the business toward an effective tracing and realization. Key to your role and to your assignment as liquidator is tracing and realization. What we have done so far we have gone through the stage 2 of the process. And what it has been after the registration is that we are now looking at what we got, vis-a-vis what we have met on ground, trying to ask questions as to differences and familiarizing with the company to know it very well. I'm taking the perspective of a large liquidation, not a liquidation of husband and wife living in Nigeria wanting to kill the company to avoid obligations. No, I'm talking from the perspective of a large business having assets in billions, now wanting to be liquidated. We have understood them, we have done everything. And when I say the minimum cost of fee is 5 to 10 million, I mean it in the sense of what I meant. If you're handling a company running into billions with activities still running, with vehicles still running with sales rep on the road, I'm sure you will be talking of a shaking money, because we're like being appointed as MD for a period of up to maybe 6 months, sometime up to 1 year, if the assets are large enough for you to handle. So you're like an MD, and you must understand that perspective very clearly. Tracing and realization. Now, what do I mean by tracing? Again, I put it, work with the CFOs or CEO to obtain the fixed asset register. It's very key to you. And relating it to the statement of affairs provided earlier, you will be able to ascertain what viable assets are available and trace them to their specific location to take inventory. You obtain fixed asset register, you take inventory. Take note of those two words. You obtain fixed asset register, you conduct an inventory. You will trace every asset to where it is lying. And no asset is to be taken away as long as they have economic value. Even if it is 1 naira, you must bring them in to the inventory. Inventory, physical, must be taken of all assets once traced: land, building, furniture, machinery, vehicles, stationery, so long as they are of value in commerce. If you can see my video, even this pen is of value in commerce. As little as that, in as much as they aid the operations of the business, must be brought into the inventory. So your job is not an easy one for it. I mean, if you will agree. We are still tracing here. Once traced and counted, call in a valuer. That is, if they are specialized assets. Even if they are not specialized, you still must have a basis of putting a value on them. And the value is not just the book value. I kept saying that the knowledge of accounting is key. The book value will tell you, after depreciation for 4 years, this is what the asset is now worth. Even IFRS has stated it that no asset is valueless. And every asset that is capable of continued use can be revalued to their current market value. And one engineer once told me that there is no machine that cannot work for life. It is all about maintenance. So a liquidator also have that approach. Okay, it is there, no problem. Perhaps somebody just disuse it technically so they can buy it, put a value on it, call it a valuer. You will still see some Peugeot 404 of those days, wagon. The last was manufactured maybe 35, 40 years ago. They are still running. Even the body is still there. But that engine, according to that mechanical engineer, said engines cannot die. It is the owner that will die. So if you work from that premise, you want to place a value on all assets, whether it is used or in operation, so as to be able to obtain appropriate valuation of the company's assets towards an equitable distribution to contributories and shareholders alike. For current assets, issue circulars to the debtors, bankers, customers, and service providers to let them know of your authority while the company goes through the process. Your letter is like a circular. I write. It's not we write. Liquidators don't write we, except they are joint liquidators. I write because it's an office, and that office is not a company. So I write to bring to your attention. Your literature will come to your head here. But I will say I write to inform you of so as per the attached. And the attached will speak for themselves. In view of this, kindly, you now also know what you want to ask them to do. Kindly provide the latest account balance or account statement. And henceforth, and also send to me signature mandate so as to change. And note that from the date of this letter, the account should stand cautioned until am I communicating? Then you say stock should be valued in line with the relevant accounting standard. Their stock, they open the warehouse for you, even though the company is going to liquidation, there's a lot of assets there, a lot of assets to be sold. Take a stock of them. Withholding tax credit must also be brought into the assets fold. VAT yet to be remitted should be recognized as a debt. So your job is enormous. We're not just looking at the assets that are physical. We are also looking at assets that are current and liabilities that are also current, especially government debts, VAT that has already been assessed, VAT that are already due for remission must be remitted. Remember that in all these, correspondences will be issued. In doing so, a new set of stationery, which I've said earlier. Still tracing, all amounts confirmed by the banks, debtors, etc., are part of the company's assets that will have to be accounted for. And if the company is to continue to run for up to or longer than 1 year, this will form the open balances. Now listen, everything we have confirmed as assets, cash, you are appointed 1st of January. The fact that you are appointed 1st of January does not stop the company's operations immediately. You only moved in sharp, let's say on the 3rd, to say, gentlemen, I rely on the authority of the court that appointed me a liquidator or receiver, or the shareholders who have appointed me as liquidator of this company and register with the commission. Please take notes. All sales and everything may continue, but you have your meeting with the accountants, with everybody. Open a separate account right now. All monies paid or to be paid from today shall enter that account. The account shall have me as the sole signatory. That's how liquidators work. Now, dealing with liabilities, we have dealt with assets. Differentiate between short-term, long-term debts and those to be settled in priority. Differentiate between short-term, long-term debts and those to be settled in priority. Here you need your ability, you need your knowledge of law, interpreting mortgages. Which one comes first in being, which one follows? Because when it comes to settlement and distribution, you will need those dates. Whereas we have traced assets, you will need to verify all claims. It is not out of place for you to issue a circular to all creditors to confirm their debts, giving them an ultimatum to so do, failing which those debts are cancelled. Verification is another cumbersome process that may sometimes require litigation and or expert opinions. That's correct. In the process of verifying some creditors or some debtors, you may run into turbulent times with them. Some may want to take an action that I'm not owing this much, there's so much I'm owing. That becomes another action entirely. So you must be prepared to accept the job of liquidity. But like I always say, and I'm still saying, you may not be able to handle it alone. It is fallacious to assume that once your name appears in paper at liquidator, only you. It cannot be possible. You can't do it alone. If you are an accountant who has been appointed, in the course of doing so, you will realize that, hey, you need knowledge of a lawyer to guide you through here. If you're a lawyer, you will come to a point where you will say, hey, wait a minute, an accountant is needed here to guide us through. So that's how liquidation works. You have only been the arrowhead being pointed at as the liquidator. The techniques required to paddle it is of many other professional colleagues. Verified trade creditors, balances, loan account balances, outstanding salaries, taxes due and assessed, including payee and VAT remittances. This must be attended to. Now we talk about realization. We have traced. And in summary, what I meant by tracing is you are working back to the statement of affairs vis-a-vis the company's current operations to trace every garden thing that the company is known to have, booking them in an inventory and calling for valuation to agree a global sum that the company's asset is worth 500 million. As verified, it is worth 520 million in the statement of affairs. What could be the difference? You have to explain it as well. Now you want to realize that. Mind you, the company was operating up to this time because we are only liquidating it, we are not dissolving it yet. So money still keep coming in. All of these must be accounted for. They are additions. And in your account of liquidation, you shall say open balance, which is the balances that you got from the bank as at the time of appointment, all assets as at the time of appointment, all other things that you have got after post your appointment are going to be additions during the process. It will be in your account of liquidation. The time is short, but I will still try as much as possible. Also, maybe after this session, to share with you is a real account of liquidation so that this thing doesn't just go in statements without reality, without seeing it physically. Then we say, realization here will include sale of holding stocks and work in progress. We realize that. To do this, engage a valuer, which I've said. Proceeds should go into liquidator's account as receipts. Remember, a liquidator is in a position of trust. Realization is a key aspect of this job and may require engaging the services of technical persons in the specific field. The whole idea is to generate as much liquidity from which claims and liabilities can be settled if the company is in debt. A separate liquidation bank account is advisable for receiving proceeds of realization of assets. So quickly open an account into which proceeds of either sale or realization can go to show that during your own tenure as liquidator, this is how much was realized. From that account too, you pay out so that at the end of the day, you can show a single bank statement that shows your activity during the period. It may take 2 years, but a single bank statement can reveal everything that you have done. We received as opening balance 10 million, addition to it 100 million. We paid out of it X amount. At the final meeting, gentlemen, as part of your cash with me are so much. The assets that we have realized so much, and so on and so forth. Settlement of claims and liabilities, the next area we go to. Once verified and ascertained, the liquidator should rank and prioritize debts and claims as much as practicable. I've stated this in one line, but it may be a work of 2-3 days. You know what it entails here? It entails now looking at register of charges. It entails going to Abuja, if you have not done it at the initial stage, to do your search for mortgages and deeds of release. If there is a deed of release of a particular debt, you know you are not going to rank that. But if there are still debentures and charges in force, you want to look at them in priority as per date of creation. Which one is settled first? Which one is settled first? Even before doing that, you look at the whole basket, how much is available? 500 million. Total debts, 200 million, which means they cannot be paid without blinking. So you just then have to prioritize them. Which one comes first? And so on. It's a problem if you have to pay 200 and you have just 70 million. Then you have to, first of all, do the mathematics of prorating the debts. Law permits that. I have to pay 200, I have only 50. Everybody will get 1/4. That is straightforward. And law will support you. That's what you need to do. You can't do otherwise. Reach compromising with creditors if the need arises. A creditor that would not be averse to taking shares instead. But don't forget, we are only liquidating or we are administering. It's different from we are dissolving. The solution comes at the end of the process when members say they want to dissolve. Your job is of a liquidator. You are a doctor who have been called to revive a sick patient. You may be able to do so as quickly as you can. Settle debt as much as the available resources can accommodate and record amount in the liquidator's account as payments. You have seen one leg of the account of the liquidator, receipts. Another one you are seeing payment, receipts and payment. It is the excess of it that you take to the final meeting for them to share as they want, if that is what they want to do. Obtain a discharge certificate and or a deed of release for every item you have been able to pay. So that's what we want to do for the company. You can't go out of that office without obtaining discharge certificate for the debt that you have paid, or a deed of release as the case may be. If it continues over 1 year, to borrow that syntax, if for any reason the process of lasts longer than 1 year, an audited liquidation account prepared by the liquidator shall be filed. Shall be filed. Help me add D to the file with the Corporate Affairs Commission. This must continue for each year during which the liquidation continues. It must happen each year during which the liquidation continues. At the end of the liquidation, you have the question, when is the liquidation ended? And I think I provide the answer here. When the company's liabilities have been settled as much as possible from the available assets. At this point, the contributories, so shareholders, are given the opportunity. The way the new law defines who a contributory is quite different from using it in stroke or the best way to use it to stroke it with shareholders. Because in 366 thereabout, the way contributories are defined are those who shall be obliged to contribute to the company's assets in the event of winding up. So they are given the opportunity to take a final decision on the fate of the company, either to dissolve or to continue with the assets salvaged. You can't revive a patient and again utilize it. You can't revive a patient and then ask it to die, except he naturally should die. So liquidating a company come to a point when the shareholders will then have to decide, should we now dissolve, or if we have the will and the goodwill, should the company continue in its operation? I've been party to 2 companies that were liquidated in this country, but after the process of liquidation, they came back to life. None of them was Afro Oil PLC. Before its eventual death, it was liquidated by Midas Bank. But behold, Afro Oil PLC failed that liquidation, which was at the instance of a creditor, that is Midas, who petitioned the Federal High Court at that time. The company was liquidated, the regulator was appointed. I remember they had a land in Alate that time, at Okeogun area of Oyo State. That land had to be sold somehow to pay debt and so on and so forth. After the whole process, the company came back. And I also remember the case of National Bank. National Bank at the time in this country went through the process, but still came back until it was marked with Sterling Bank or something like that. So liquidation in itself does not really mean that we want to dissolve now. It is an insolvency practice of looking at the company's assets and, as much as possible, trying to see if the company can be salvaged. And if that happens, the company continues in operation. You can liken it to administration. When the company is being administered at the instance of a regulator, does it mean the company should die? No. It means for the time being, let somebody else look at the affairs of this company. It happened to stock exchange in the days of the Castle, Houston, indeed. But that administration didn't mean stock exchange should die. In fact, it's now working, how do you see that one? Wagging stronger. It's moving stronger than ever before. So these are examples we can give of the real implication of liquidating a company. The solution is a different ballgame. We want to dissolve it after liquidating. Let me also quickly look at the chat room. There are some questions here. Victoria, what do you mean by IP? Do you mean intellectual property? Yes, somebody must have asked that question. Sir, the light on your face is not enough and your camera is facing down. Really? I'm sorry about that. Maybe that can be better before we finish. So I think I was still looking at the question. Let me look at all of them. Please, how is the fee of the determined? I think I made allusion to that. I tried to answer that before now. What happens where the board is challenging the winding up? If the board is challenging the winding up, first and foremost, we know from this our discussion that can't be members' voluntary winding up. And if it is members' voluntary winding up, the board cannot put itself in the ways of the shareholders who have resolved that the company be wound up. All they can be asking for is compensation for loss of office, if any. Not that they can say the company can be wound up. Can the banks, could union bank directors prevent the sacking of the board when Oshibodu was appointed? or even recently in First Bank. Have you heard anything in the press? I'm sorry, I don't know who is who here, but pardon my statements. You pardon me if it goes contrary to somebody's sentiments and emotions here. But have you seen anybody from First Bank taking action against CBN? No. Even though that can be discussed on a different platform, on a different level, but the point is, once shareholders decide, or a regulator or a court of competent authority, jurisdiction, say that this is what's going to happen, directors are mere trustees. How can a trustee block or prevent himself from being removable? Chasajiboye FICM, okay, that is a private discussion. What happens where the board is challenging? That's what I've just discussed. When you couldn't hear anything, it was because I was distracted. What happens where no, I've seen that. How does the liquidator, Ojiji? Ojiji, if you can hear me, go through the question quickly again.
Okay, sir. All right, thank you. Let me take, okay. How does liquidator deal with the IP rights?
Yeah, intellectual property is also a property. You know, I've earlier mentioned that some properties, you can't just say you want to value them. Valuing intellectual property in Nigeria is still a very big issue. Maybe somebody like Professor Sodipo, whom I have come across in IP matters, or people like Abdullahi Taiwo, who run a good practice in that area, may be able to have an idea of how IP is valued. But I know you need expert opinion in that area, because the valuation is such that you have to take cognizance of the earning capacity in that property. If for instance, the IP is in the form of a trademark, the question will be asked, what do you think these products can earn in form of revenue over how many years? These are questions, but they also have to be valued, and it will be very intricate to do so, but it's still, a value still has to be placed on it. Can the shareholder challenge the appointment of a liquidator? Well, if it is a court-ordered appointment, shareholders who have objection to the appointment of a liquidator may be able to file his objection, but that still won't mean that the liquidation appointment or the approval of the liquidator is invalid. It's only expressing its own dissent. Don't forget, all of this derives from company law. And a member is entitled to bring an action under the unfair prejudice process. You know, if you believe this process is unfair, is prejudicial to its interest, why not? It can take an action. But taking an action does not mean what has been done can be set aside, except it comes or with appropriate proof. So what court will do, or is likely to do in most of these cases, is to award him his own damages, or to give him the remedy that he's looking for. If he wants relief, he's relieved, either by paying him off at a very good price, but they cannot stop the majority from doing what they have done. Don't forget, we said all of these things must be done by special resolution. And what that means is that for you to say it has been done means that 3/4 of the members, or of the members at a meeting where a quorum is formed, pass that resolution. So a dissenting view will be heard, but not so much more than to give him appropriate relief. Hope that's satisfied. In view of the responsibility of a company coming out of liquidation, how then does the liquidator complete his work? He completes his work by presenting his account, which is approved by the shareholders, then the minutes of the last meeting. Don't forget, there will also be notice of final meeting in the Gazette and in 2 national newspapers. When they have that meeting, he lays his account before them. He indicates how the assets are to be distributed. Am I communicating? But that meeting is not only to say, thank you, go away. That meeting is also to take one resolution. And that resolution is to dissolve the company. Now, if it is the case that they do not want the company dissolved, but to continue, they will so resolve. And the minutes of the last meeting, together with the report of the liquidator, signed by an auditor with his signature and ICANN seal, will be delivered to the commission. The commission will see that the members of this company have accepted the liquidation and the liquidator's report and are willing to go back to business. And that is why also the law says a company is not deemed, even dissolved, even when they say they are dissolving it, the company is not deemed dissolved until after 90 days of that resolution, which means a member can still bring an action or a petition to say, look, this company has not been fully liquidated. We want our company back. Give us the share. We will pour some other substance in it and run it. So that is the way it works. Can the shareholder challenge the appointment of the liquidator? That's what we have looked at. In view, okay.
No, sir.
Why do liquidators often require the police to take over? No, it is not in all cases that you see liquidators appointing police or calling the police. Where you see a receiver is different from a liquidator. In receivership, a particular asset is what the court has appointed a receiver over. Let's say, for instance, a bank has many branches, and in fulfillment of a creditor's whatever, one particular branch has been received, which means that before now it was a subject of a mortgage, of a fixed charge. When that charge crystallizes, a receiver is appointed over that particular asset, not over the company. Liquidator is over a company. Receivership is over a particular asset. Now, if there's a challenge, if there is a problem about vacating, you can engage the police. That's after a series of warning, of notice. Please vacate. You may even just be a judgment creditor and you want a garnishee over the assets. You want to, series of things, but I do not want us to look at it that it is the liquidator that often appoints the police. Most times, it is the receiver or receiver manager who does that. Liquidation is there already. It's in the business already, we're running it. It's one paying salaries. So what does it need the police for? Except in cases, I'm not seeing much of that, and I must confess. But I'm not saying it's out of place. It is also perhaps because of the level of understanding of the man you call liquidator. Because if he understands his work, it won't talk about. I'm sure that which one will the police matter? You are appointed, court appoints you a liquidator. You know your job, you swing into action. If they say they won't swing into action, if you are appointed by court, go back to court and report the man to court. Court will know what to do, not you taking the law into your hand. There's nowhere in law that they say the liquidator shall enforce his authority. No. If you are appointed by shareholders, go back to the shareholders. If you have already registered by the CAC, go back to the commission. The registrar, I like to inform you, blah, 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 blah. Before you get your license withdrawn, report to the commission and you are discharged. Is there a limit as to the number of employees the individual can employ to assist him in carrying his task? The scale of business will determine. But the ones you cannot lay off, perhaps until you finish your job, is the CFO. The CFO, he knows so much about the company's liquidity and where the company's monies are. You cannot gamble laying him off. Another key personnel. You have to be paying their salaries. They have to be working. Their debts you want to collect, they're the one who knows them. You know them. They still have to be working. Can the situation of receiving occur in the process of tracing during liquidation? Well, if in trying to receive, if in trying to collect, there's a problem, I can't see receivership coming in the process, honestly speaking, because a receiver is enforcing a charge. And as you are trying to observe, if there was a charge in place, I said go to the registries and confirm what is on ground. If there was a mortgage that crystallizes in the process of your duty, since you have the powers of the company in your hand, if receivership is what is needed, you can go into receivership. You can receive that particular asset. You are already in liquidation. Somebody inside the water is not afraid of rain. Nobody can receive you at that time because you are already doing what is needful. You are already trying to realize your assets so as to pay the creditors. Only a stupid creditor will see a company in liquidation and still want to receive his assets. The question will be asked. Even a good court will say, but this company is already in liquidation because of this purpose. So what are you receiving again? You have to wait because the appointment of liquidator, especially if it's from court, you cannot duplicate the efforts of this court. The courts are aware of that liquidation, so allow that process run its course. And if it is members voluntary winding up, but these people have sworn to an oath that they will be able to pay your debts. So what's the stress? Am I communicating? You have to look at these things holistically. If it is court ordered, court won't duplicate its efforts. We have already appointed a liquidator for this company. So let the liquidator finish his work. If it is members voluntary liquidation, the court will still say, but can't you see this oath? These guys said they will pay your money. So why again are you receiving? I hope that satisfies Miss, Mrs. or Mr. Daudu. I think for now, those were the questions I'm able to see from this chart. And let's continue. Now, where did we stop? Now we say that, sorry, I'm trying to remove something from my screen. At this point, you are contributing, blah, 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 blah. This one will be taken at the final meeting of the members in the case of a voluntary winding up. And then closing the process. And as we're also closing the session, issue a 21 days notice of final meeting and publish in the Gazette, which I've mentioned. Prepare a final audited liquidator's account. Prepare minutes of the final meeting. Deliver the above together with the original certificate of incorporation. If the resolution is passed at the final meeting for a dissolution, the registrar will issue a letter confirming that the company will be deemed dissolved after 90 days. Section 641, subsection 4 of the 2020 Act. And if at this meeting, look at this last bullet, if at this meeting members say, look, gentlemen, that's okay. You'll be able to pay all of these guys. Liquidator, how much do you think you still have? Okay, you still have 90 million. That's fine. They look at themselves. Should we change the company's name and come back to life? Don't forget, the house number won't change if they are not saying they want to dissolve. Or if they say they're going to dissolve, even the Corporate Affairs Commission will still give them 90 days to have a rethink. This 90 days is not for fun. It's a 90-day period to allow for possible rethink. During this period, the name cannot be used by anybody else. If you search for the name for availability, it will be an error for the name to be approved. If it is approved and you use it, it is likely that at the point of collecting certificate, they will tell you, sorry, the name was approved in error. Are we communicating better? And gentlemen and ladies, I want to believe we've had a good time together. I should believe so because of the number of questions and contributions that I think we have got. The time apportioned for me is 2 hours, and I believe those 2 hours have been spent. And I remember a promise I made that I should be able to show some documents which I still will try to show before we call it a day, right? So if we are muted and we want to, somebody want to talk, it will be, I'll be glad to be listening. Thank you, Mr. Emeka, for your comments. It is well received.
So there's a question before that.
Please,
it's asking. Okay, it's Mrs. Gabari is asking, please, will the salaries to be paid retained staff be at the existing amount, or can it be reviewed downwards due to the poor finances of the company?
Yeah, the liquidator is in full charge. In fact, it will be good for him to actually review the salaries and pay according to what he feels the company at this time can afford. There'll be a lot of moral suasion because he's trying to beg them to please continue for the time being so that the job can be done properly. So it is within his power to review it or to keep it as it were if he says that the company can actually afford it. So I was talking to you about declaration of solvency. If you look on the screen, you will see that declaration. It is something like this. It will go in the form of we, being directors of this company, we have examined the affairs of the company and we believe the company can pay. It is taken to court as an affidavit. It is sworn on oath. And attached to it is a statement of affairs. As you can see, these statements, they are just one-liner. Now, for instance, see, cash at bank, 5.9 something billion. Now, this amount may not be in just one bank. That's why I said you then must ask for a schedule. They'll give a schedule for this. Bank A, Bank B, Bank C, Bank D. This is how much you have. So receivables, this how much you have to collect from people. This 58 million is not from billion, is not from just one person. It is from a lot of people, right? You have for debtors schedule, debtors balances, one by one with their addresses, so that you can circularize them. Inventory, you have to trace. This is inventory. These are goods to be sold. Open the warehouse, do a physical count and book them. Furniture and fittings, all of this is what they call statement of affairs. Now, see also, it has liabilities, trade and other payables. You check everything, you trade. You see that this is just one page, but this one page can go into 500 pages of other schedules and supporting documents. Then we go on, we go on, we go on. When you have registered it, this is what you get from the commission, that your registration as liquidator has been registered. You are therefore advised, if you look at the last statement, you are therefore advised to proceed to the next stage of the winding up process. And you continue. You continue. When we say you go to the federal government to publish in the Gazette, you go to Mobile Road, you ask for what you want to publish, they give you a fee for it. At that time, it was 85,200. You publish it, and what you publish is this is the Gazette that will tell you to publish. You publish it, and this is in respect of the final meeting. This must be in the Gazette. And you come to the meeting, you hold your meeting, you produce appropriate, there will be resolutions, which is not on this screen, which I may share privately with those that may be interested. So the minutes will also be taken to them, to the CSC, along with other documents before the liquidator is discharged. This, I believe, we are all together on, and if so, glory be to Almighty God. Please, will the salaries to be paid to the staff? We have looked at that.
Yes, we have looked at that. The next one before it says, can the situation of receiving occur in the process of tracing during liquidation?
We have also attended to that. That we have also attended to, I believe. Okay. I said tracing, receiving shouldn't occur, because if it was at the instance of court-ordered liquidation or winding up, the fact that a liquidator has been appointed is sufficient to show good faith that this company wants to pay. But if it is the company in liquidation that wants to receive, yes, it can do so. It is part and parcel of the powers of the liquidator to do that. What are the requirements for appointment of insolvency practitioner? The appointment of insolvency practitioner is contained in section 703 to 704, from 704 to 708 of CAMA. That is, that person should be either of the professionals listed there, a legal practitioner, a member of BRIPAN, or anybody of ICSAN, etc., whom the commission, after reviewing his application, believe is a person capable of carrying on the job of an insolvency practitioner. As you can see, if you can see my own letter, this is from CSC, that you are now accredited as an insolvency practitioner. So if they assess your application and see that you have done it before and you actually can continue to do it, they license you. And that essentially is it. I hope I have clarified some of these questions. If so, to God be the glory. Thank you, Adebanjo. Was not exposed. Thank you very much from Louis Consulting. I will call you later in the day. What are the requirements for appointment of insolvency practitioner? I have just indicated that. Yes. Thank you, everybody. I appreciate you all for the participation. Hope to see you at some other forum in very near future. Thank you. God bless you all. Thank you very much for the invitation. Yeah.
Thank you very much, Mr. Adebanjo, for that in-depth and insightful presentation. Well taken, and I know that our participants have also, they have something to take home. I know participants have been asking questions, we've been interacting, and you'll be providing responses to them. But just in case, do we still have any participant that has any, maybe one question or a comment or observation? If you have, you can say so now before we bring this session to a close. Anyone raising his or her hand? Any question, observation? Okay. So in the absence of any question, I would like to crave our indulgence, as we have always been doing. Please let's enable our videos for the, okay, we have 2 participants, hands raised. Okay, Mr. Okechukwu Okereke, please, you have the floor, and then Mr. Charles, you take after that. Okay, please, sir.
The distinguished lecturer. In the course of your lecture, you made a side observation that in 6 months' time, you believe some of us would have come into insolvency practitioners. Why the 6 months' time? Can't we go right away and apply and register after this course?
Mr. Charles, if you are fired enough to do so, please go ahead. you may go ahead. But the requirement of CSC is such that, from my experience when I was applying for my own, is either you have joined in doing one and can show evidence that really you have been part of one, or you can demonstrate, like me, that I've been appointed severally as liquidator of a company. So please look for opportunities. You know, we can talk from time to time when these things come up, join a team of liquidators, and then behold, you are there. Or if you want to be a member of BRIPAN, which is also a requirement, or if you are versatile enough in practice, you can apply to CSC. You probably may be considered if you have experience in similar area. But I think you can restart right away. Thank you very much.
Thank you.
Okay. Mr. Jiboye, sir, please, you have the floor.
Thank you very much, Mr. Adebanjo. I'm very happy. This was a very thorough presentation. You called the initial speaker Charles. That's not Charles. This is Charles now. So let me also put you on spot with what you have just said now, that it will be very interesting to join in any liquidation that is ongoing now. And that will not be at any extra fee to the liquidator. Thank you very much.
God bless you. Thank you, Charles.